If you're a graduate, this is the easiest time in South African history to virtually guarantee that if you follow these steps, you can earn 100 grand a month net in retirement in today's money. Now, to earn that income as a pensioner in 2024, you need 32 million rand saved in RAs and pension funds. For a 23-year-old graduate, that number will be 550 million rand by the time they turn 65. And if you invested into an RA at 12% a year, you'd need to contribute at least 28 grand a month to get there. Over 52 million rand in contributions. Now, the opportunity is that 10 years ago, tax-free accounts didn't exist. And because the income from a tax-free account is tax-free, unlike the RA, you wouldn't need 32 million rand today, you'd need 20 million rand, which would be 340 million rand by the time the graduate turns 65. Secondly, you can invest as you please in a tax-free. And for the past 10 years, the S&P 500 has done 19% a year. So if the graduate paid the maximum allowable, 36 grand a year, it would take them 14 years to hit the R500,000 rand lifetime limit, by which point they'd be 37 and would have 2.2 million rand in their investment. Now, if they just left the money there for the next 28 years until they turn 65, what annual return would they need in order to get to 342 million rand? 19% a year. But is 19% a year realistic going forward? If you go back 42 years from 1980 till today, the S&P has done 12% a year in dollars. To work that out in rands, 1,000 rand back then was $900. So if you invested $900 into the S&P, today you'd have $103,000, which is 1.8 million rand. So if you started with 1,000 rand and now have 1.8 million rand, what return is that per year? 19%.